Thank you, Dr. Momin, that you have invited me for this session on the economic and financial sustainability. So, I just start with the basic introduction of the economic sustainability, and then I will go forward with the financial sustainability, and after that, with the global reporting initiative, which we have, which is globally known as GRI, and then what are the challenges ahead we have. So, the major part of this session is revolves around the global reporting initiatives. So, in the economic sustainability and the philosophy, just a minute, I think that is coming in between. Okay, now it is fine. Uh, as you know that in the economics, we have the factor of production, which is basically the input which is used to produce something or to rendering any kind of services. These factors of productions are mainly, as per the traditional and neoclassical theories, are the land, labor, capital, and representation that we know. Okay, but what we don't know, that is there any other factor besides these factors? So in the recent times, majorly we are talking about this factor, and this factor is the natural capital, which we actually didn't consider because it is free, and anything is free, we don't consider that is much more important. But we already know that without considering the natural capital, which is actually kind of what you can say uh, required for sustaining any kind of business, even the human life as well. So how we can measure these kinds of externalized cost? It can be quantified or not. And this is not the only one side. Okay, there are some social factors, there are some governance factors which need to be measured. So this is the philosophy behind the economic sustainability. So let's ask a simple question that, okay, this sustainability on the cost of the economic growth. So are we assuming that whether we are going to be sustainable and it is on the cost of the economic growth we are having? I'll not say much because there are two questions which will dictate itself. That first question is about that why are the people installing the solar panels all over the world comparing to pay for electricity bills? Because it's not about that the solar panels are cheap. It's because that they want to save the electricity bills. It is not their first priority is not to go forward for sustainability to save the environment. Their first priority is to save electricity bills. So that means they are being economic as well as the sustainable. And if you know that in the year of 2021, India has sold a record electric cars. Okay, so that means that people are buying the electric cars because of much better features, and it is also sustainable. So they are actually cheaper as compared to the fuel prices. So that's why the people are being economic. Now apply the same concept from this retailing to the company level. Now when we are talking about the company level, there is in 2011 the Chris Knight of PwC sustainable practice. He has told this thing when he was asked about the sustainable practices and how the PwC is applying it, that there is nothing to do with this corporate social responsibility and the green agenda. He's talking about that, okay, it is just a hard-nosed economics. Why did he talk about like this hard-nosed economics? Because he knows that today we obviously we are spending sum of money on the sustainable factors, on the social factors, on the environmental factors, governance. Okay, we are appointing a team who can manage, who can measure all of these factors. But in the long term, we are gonna win. Okay, we are holders at our side. And the companies which are actually moving towards these sustainable factors, the investors, the investors are investing in those companies. They are getting very easy fundings. So this is not a rocket science. This is a future bind what you can say economics, which the companies are applying within their companies. Now let's see into a very philosophical manner. Suppose on the one side we are having the GDP, per capita income, etc. That means all the economic factors. Suppose, and on the one side we are having the natural resources. Let's see this thing as an equation. In the GDP per capita as a numerator and the natural resources as a denominator. As we know that as the population are increasing, people are spending too much. okay, the GDP per capita income is gonna be increased in future. So basically the numerator is gonna increase, but we're talking about the natural resources. It's either can be constant or it is decreasing. It cannot be increasing, okay, until we will apply some of these sustainable practices within the world. So now the thing is that we do require to have this multiple stable, and how we can make this multiple stable, because the GDP is increasing. So on the same page, we need to increase the natural resource, or on the other hand, we need to deplete it less. So there are only these two ways. Okay, the increasing natural resource is not an easy task. So the other way can be true, that obviously this multiple is gonna decrease over time. But what we can do, we can slow down this process, okay, of depleting this natural resource, and to have this multiple slow down over time. So this is the one thing. And now when we are talking about the sustainable finance, so this is about sustainable economics, that how we can sustain. So I just told you that these are the two factors, and now it is upon you that how you will manage it. Okay, so nobody else will tell us that, okay, that how we need to use our natural resources. We ourselves knows that how we need to do, what we need to do. Now, when we are talking about a sustainable finance, it is a kind of defined in the literature that the companies take investment decisions, but now whenever they are taking the investment decisions, they are considering the environmental, social, and the governance factors into consideration. So basically, it is the abbreviation popularly known as ESG. Okay, so they are taking this ESG into consideration while they are doing any kind of investment. So what is good in this? Obviously company is doing investment, and they are doing some of the corporate social responsibility before. It is not a new phenomenon. But now the thing is that the company knows that this thing, that if they are doing this ESG and they are reporting this thing, okay, in their annual statement, they are gonna get easy funding. They are gonna attract the stakeholders, different types of stakeholders, not just the consumers, not just the investors, but the other stakeholders as well. And they can get subsidy from the government. Okay, so there are different aspects of it. So the environmental factors, if you will talk, then it includes the kind of the climate crisis or any kind of sustainable resources which you will be using wisely. The social factors are including within a company there are employees, workers. So talk about their human rights, the animal rights, the consumer production. So all these stakeholders who are human. So basically, it's talk about the social dimension of these things, protecting of each of these parties. Whenever we are talking about the governance factors, we are talking about the management as a whole, the senior management. We are talking about the board of directors. We are talking about the relationship of board of directors with the investors. We are talking about the employees' relation with each other, the conflicts. So the kind of relationship the organization have with the government. So all these things are part of the government factors, governance factors. Now the big portion is that how we report information related to sustainable finance, because in this sustainable finance, okay, we have talked about different dimensions: social, environmental, we have talked about governance. But when it comes to measure it, when it comes to report it, how we can do so? So in India, actually, there are different measures, and globally there are some different measures. So first of all, we are talking about the globally, and I will give you insight that how India is moving towards the sustainable initiatives. So the thing is that global reporting initiatives, which is actually a kind of tool, this is an institution, but they provide a kind of tool through which we can report the environmental, social, and the governance factors. So it is a international independent NPOs who promote these kinds of stuff, okay, to report sustainability. So in the initial phase, it is started in 1997 with the UN initiatives for the environmental programs. Now this GRI actually produces some very comprehensive, reporting framework through which by applying it, you can, or the company can report the environmental, social, and governance factors into its annual statements. Now into this GRI, actually they are having a vision. In the vision, they have that okay, the company are company are also a artificial responsible person, and as per the given rules and regulations, they are reporting transparently. So that's what their vision is. In 2016, the GRI guidelines also includes the reference to the UN Sustainable Development Goals. So if you will check out the UN, the United Nations websites, they are having around 17 Sustainable Development Goals, which is poverty, water resources. This is based on employment. This is based on the governance factors, the international relations. So all these factors they have. So the GRI guidelines actually aligned with those. Now we'll see that first of all, that who will get benefit. Okay, we are having this GRI standard score, but who will get benefit out of it? So the standard will help all the stakeholders. Stakeholders means like consumers, governments, investors, suppliers, whosoever is linked with the company or the organization, they will get the benefit out of these standards. As first of all, the company, the major stakeholder in the GRI standard is the organization. The organization can understand the need of different stakeholders, and accordingly they can prepare the reports, the annual reports, or they can report it. Okay. Now, if we are talking about the different stakeholders, suppose if there is a person who want to invest into an organization, how they can look at GRI standards and can understand that what is happening within the company. So first of all, whenever the company is reporting the information about GRI, okay, into the annual statements, and also obviously it is not only the reporting. In the long term, company wants to integrate these things with the strategies of the company. So by looking at those first two things, reported information within the annual reports and the integration of the strategies which company is going to adapt or adapting slowly, the investors can understand that okay, these are the financial risks which this organization have, and according to with the lens of environmental, social, and governance factors, and then they can evaluate the long-term success of that organization. So now it becomes easier. They just need not look to a number which is a profit, because that profit will not give the perception about that how a company treats its employee. It will not give a understanding about how much carbon emission a company is doing within the environment. So those are unmeasurable factors now can be measured, and the investors can evaluate the long-term success of the company. So if we want to segregate the GRI standards, it's in three parts: universal standards, sectoral standards, and topic standards. So universal standards basically are the kind of the basic standard, the disclosure requirement it has for all the companies. It's very specific to a company. All the companies has to comply with it. So within these things are also the universal standards. They are having the foundation, the reporting principles basically. So where the foundation, these are the things which every company has to report. Okay, these are the rules and regulations or the compliances every organization has to do. In the second GRI, which is a general disclosure, which is actually talking about the contextual information that based on the strategy, governments, and every context, they have to make these disclosures about the situation of the company. Now, in the third part, the GRI 3, the management approach, they basically every report comes with a management approach. That means obviously there are not much to quantify. There are all the measures, most of the measures actually are qualitatives. And when we are talking about the qualitative measures, it comes with a management approach, that how management looks towards these things. What is the management view about these things? So these are all the narrative reports which talks about that how the management has handled this situation, how the management has managed this issue, and they need to report it. Okay, but in today we are also not talking about sector standard, which is specific to every sectors, basically 40 sectors. We are talking about the topic standards. In the topic standards, it contains disclosure for providing information on different topics. These topics are segregated into different parts. So I'll just start with the different parts. Okay, so first of all, that how this GRI, I will talk about the different parts, like in the 200 series, which is specific to economic topics. There are 300 series, which is specific to environmental topics, and there are series 400, which is specific to social topics. So our agenda for today is to cover this series 200, which is specified for economic topics. Now, how whenever they are reporting it, there are two types of things which a company need to comply with, or the one part is core, which is the minimum bare requirement. Okay, the minimum information which a company need to provide within the reporting part. The second is the comprehensive. It too requires some additional disclosure, some additional information with the strategy, broader strategy, with the ethics of the company. So these things also need to be reported. So now the so basically company has to report the core thing, but it is in advantage of the company if they do report some additional information which is making their reports comprehensive. So let's see that how these GRI reports are prepared. So first of all, the organization understand the systems and the key elements which is going within the organizations. They identify the material topics. Material topics means that whatever the topics are making significant impact on the economic, environmental, social, these type of aspects. These are called the material topics. So they will determine all those of material topics which are having a significant impact on these factors, ESGs. Now they will report the information. So whatever the investment they are doing, whatever the expenditure, whatever the revenues they are getting, they need to report all those things. And obviously, if there is any omission, okay, they forget it. Okay, these are some things which we are omitting, we are not including within the report, but they need to provide the reason why they are omitting some specific information within the report. Then, based on this specific information, they will prepare the GRI content index and standard of statement of use. So once the GRI content index is prepared, they will publish this GRI's content index and notify to GRI. So this is a qualitative process which we have seen. Now, the main thing is that, okay, most of the things are qualitative there, but there are some specific information which need to be quantified. And what are the rules and regulations set aside which can help us to quantify those things related to environmental, social, and governance factors? Okay, but as I told you that we are only talking about the economic impact on these things, economic and financial impact on these things, not about the other things. Okay, so let's see. Okay, so these are the standards which we have. So as I told you previously that 200 series is dependent on the economic topics. These are the 7 economic topics which we have to cover today. Economic performance, market presence of the company, indirect economic impact of the company, which is having an indirect effect. That means with the direct, that has nothing to do with the direct implication or the direct business relations of the company, but some indirect things. Procurement practices, this is based on the value chain. Anti-corruption within a company, anti-competitive behavior or antitrust related topics, and the taxes. So these are the topics which we are going to cover. The series 300 and 400, I hope that they are the topics which you will be covering in the next sessions of this FDP. So the first GRI, which is GRI 201, based on the economic performance. So company need to report first about the direct economic value it has generated and how much it has distributed. So as in the accounting, the reporting has to be done on the accrual basis. Accrual basis means that it has, if you are not handling the things on a cash basis, you can do it on accrual basis. Suppose if there is some outstanding expenditure you have, but still you can include it because it is the expenditure of the reporting year of the current financial period. So these are all the accrual basis company can do. But if the company is doing on a cash basis, that is also all right. But company need to provide a justification why they are adopting the cash basis and not the accrual basis. So that is the first point. So company need to identify the direct economic value generated, which is basically the revenue of the company. That how much revenue a company is generating. So revenue is basically the kind of the sales company are making plus some revenue of from different sources. The different sources like if a company has any kind of rental activity, if company has some it has given loan to somebody and getting interest out of it, it has investment and getting dividend out of it. So these are the other kinds of revenues sources which a company has. So the total revenue means the company sales and the other parts of revenues. So these are all the direct economic value generated by the company. Now let's see that these are the generated values what the company, the organization has distributed towards the different expenditure towards the social part. Okay, so first part is the operating cost. So operating cost is nothing but which is involved into the commercialization of the product, which majorly contributed towards the material, labor, and overhead part. Then there are employee wages and benefits. So if there are employees, workers working in a company, so obviously company need to pay salary, wages to them, and the other benefits, which can be in the forms of pension plans, retirement plans. So all these things keeps apart. They may provide some housing and other things. So these are all the other benefits a employee have. So these are all the things which comes under this thing. The payment to providers of capital. Suppose the company, the organization may not have a total capital of its own, but the capital may be provided by different sources. Suppose if it is getting a loan from the bank, then the company or the organization need to pay the interest out of it. If a company is getting, it has taken loan from some then from some company, then they need to pay dividend. So in these kinds of providers, either company has to pay interest or dividend. Payment to governments. So companies are obliged to pay the taxes to the government. So in this form, community investment. So community investment means any kind of donations if the organization has made. It also comes under this community investments. So these are all the parts of the economic value distributed. So when we subtract this distribution part from the generation part, we will get the economic value retained, which is actually the kind of the major part saved by the company retained. Sometimes it can come in the minus, okay, but that is the part which a company is retaining within it. Okay, now the question is how to get all of this data. Okay, the revenue, operating cost, employee wages, and all this other stuff. See, these are all the things which are easily identifiable in the annual report of the company. Okay, if you just check the profit and loss statement of the company or the balance sheet of the company, all the figures you can find out over there, and you can calculate the economic value retained by the company. So all these economic value generated and distributed data, company need to report separately, country wise, regional wise, or market level wise. Suppose if a company is operating in different country, then depends on that much reporting it has to do. Okay, same applies for regional and the market level. Now, the second topic under the economic performance is based on the financial implications of the risk and opportunities due to climate change. So basically, what is happened here that in this section, if there is any kind of financial implications arises due to the climate change, then how a company need to report these things. So the company, see, in this case, company will report something on the qualitative measures, okay, and something on the quantitative measures. So on the qualitative measures, company will report about what kind of risk, and what kind of what you say the climate change it happens. Suppose it can be physical, like the water scarcity can be there. Okay, it can be some other kind of any kind of climate change due to which some financial obligations came. So this description company need to provide that, okay, if it is of physical nature, then you will classify it as a physical nature. Secondly, a description of the impact associated, that what are the parts of the organization impacted by this climate change. So company need to report these things. Suppose if there is a storage or the warehouse is much more impacted by the electricity, some of the suppose lightning, then company need to report, okay, the impact happened towards the go down part, okay, but not the other parts of the organization. So these are all the qualitative parts which company need to mention within the annual reports of the company. The financial implications of the risk opportunity before action is taken. So basically it talks about that, okay, once these climate change happens, what are the things what are the precautions a company has adopted before? Like a company may have installed some fuel switching, they have installed some of the carbon emission, some sort of absorption. Okay, so there can be different measures which company has undertaken before these climate change things happen. But obviously, these are not enough measures able to stop this climate change. Okay, because that is not within the human purview to manage it. Now, the cost of actions taken to manage the risk opportunity. Now, it is the quantitative measures that, okay, these are the methods which company has adopted and what are the costs associated to manage these things. Okay, so here a company can quantify these things, that how much we have spent in order to manage all of those tools and equipments to tackle with the climate change. So these are the things which company need to report. Okay, and if these things are not quantifiable, then company need to provide a kind of a plan and a timeline within which a company can develop the necessary system to quantify these things. Okay, so this is the 2012. Now, the third part related to economic performance talks about the defined benefit plans, obligations, and the adult retirement plans. So, in this part, basically, we are talking about the social aspects, that how well the company is taking care of its employees, how well it's taking care of its workers. Okay, what are the amenities they're getting within the organization. So, if the plan liability are met by the organization general resource, okay, the estimated value of those liability, that's very simple. Okay, that means that if suppose there are 10 lakh rupees liability which can arrive at any point of time, whether company have that much of general resource to tackle with that kind of liability. If yes, then obviously you need to provide the value of those liability, as I told you, in this case 10 lakh rupees. Or if a company is not having a general source, but they have many separate fund to provide the pension liabilities, then company need to provide that, okay, up to which extent this fund can cover the approached liabilities, or the basis on which the estimate can be calculated, or when the estimate was made. Okay, that means the timeline. Suppose somebody is getting retired at 65, then as per the timeline they need to mention that, okay, in the year 2021 or 2022, how many persons are getting retired. So obviously it is you just calculate the values of the retirement funds, and that becomes the obligation of the company. If a fund set up to pay the plan's pension liability is not fully covered, then company need to provide the kind of a strategy or the timeline, okay, that it plans to cover the full coverage of those liabilities for the employees and workers. Okay, so basically it's a talking about the obligation from the employer part, that okay, something is not fully covered, that how much time do you require, what are the study do you have to fully cover those obligations of your employees or workers. Percentage of salary contributed by employee or employer. So obviously there's a part of the basic out of the basic pay which is of the employee, which is contributed towards the total salary, the some provident funds, and that much of percentage also is provided by the employer to a fund. So now the percentage of that fund need to be mentioned. So all these things, as you understand, are liabilities which are can be easily estimated. So in this part, as you can see that it is all the things we have the quantifiable things. You can quantify the liabilities also. You can quantify that when somebody is retiring and how much time they have. So you can quantify as per the time period, the total liabilities. You can quantify as per the percentage of salary you are contributing, the employer is contributing towards the employee salary. Based on that, you can calculate the total liabilities and the level of participation in the retirement plans. So here there are many kinds of retirement plans we have. Like one is mentioned here is the definite benefit plan, and another is the defined contribution plans. So there is one difference between these two plans. In the defined contribution plans, the organization is contributing towards a fund, which can be general fund or it can be separate fund, but towards a fund out of which employee will not be getting anything. If that fund is exhausted, then employee will not get any fund. That means the employer has given a defined contribution to that fund. Now, if that is not enough with the need of the employee is not responsible. Okay, so that kind of plan, I don't think that is better as per the social responsibility. Another is the defined benefit plan. So that means it doesn't matter that how much portion the employee is contributing towards the fund. What means is that the employee is getting a defined benefit out of it. So now the benefit is defined from the employee side and not from the employer side. So this is actually a good obligation or what you can say a good social responsibility if the employer is abiding by these things. Now the same thing is that just a minute. Okay, so we are leaving this part. Okay, so there are three things which we have studied in the economic performance. First is the direct economic value generated and distributed towards the society. Financial implications, risk and opportunities if anything happens due to the climate change. Defined benefit plans, obligations, and the other retirement plans. This is the last thing. Okay, now we are talking about the market presence. So in the next standard, market presence, a company, the organization which is working somewhere locally, how well it is treating the local people, whether it is having the approach to the local market, approach to the local people, taking care of those local people or not. That is about the market presence of that organization. Okay, so this is actually impacting socially, and in some sense, it is also moving towards the economic development of that local area in which the companies are operating. So the first thing which we need to consider here is that ratios of standard entry level wage by gender compared to the LMW. This is the low minimum wages. Okay, the local minimum wages, you can say. So the local minimum wages means that in the area where the company is operating, obviously there are different parts of the world where the minimum wage is different as per the law. So in that area where the company is operating, what are the minimum wage they have, and the ratio need to be generated with comparison to standard entry level wage. Standard entry level wage means that the initial position within a company, okay, the initial position within a company, a person can start with. So that is the standard pattern. So it doesn't include the intern, that kind of person which is actually not a full-time employee of the company. It doesn't include those things. So if you are taking a ratio of these things, you can understand whether a company is trying to develop the local area or not. So when a significant portion of the employees are compensated based on basis, subject to minimum wage rule, as I told you, the company need to report just the ratio of the entry level wage divided by minimum wage. That's it. Okay, and obviously gender based also. Company need to segregate the information on the gender basis data, man versus woman, so that you know what kind of insight it can give the man and the woman based data. It can give the insights about the in the local area whether there are inequality or not. Okay, so the these kinds of informations, if gathered, it can the company will get to know about these issues and they can rectify their policies, they can rectify their strategy to change that inequality. Okay, when a significant portion of the other workers, excluding employees, so it is not the employees but the other workers, means that anybody else who is working for the company directly or indirectly, okay, performing the, it includes the part-time, even the freelancers, okay, performing the organization activities for compensation based on the minimum wage, describe the actions taken to determine those are paid out the minimum wage. So in this case, you are also calculating the ratios of the other workers, okay, which is not a part of your company, but they are working directly for your company, directly or indirectly for your company. And you will again provide a kind of the ratio and will see that whether those other workers are below the local minimum wage or not. Okay. Whether a local minimum wage is absent, sometimes it happens that in the absence of the local minimum wage or absence of regulations in that area, or the local minimum wage is variable, it is fluctuating too much. In those cases, the different minimum wages can be used as references, and it can that can be reported as a minimum wage. Okay, so if in that area you are not having a minimum, local minimum wage, you can refer to a nearby different area and then you can convert into a ratio. Okay, so these things are also quantifiable because you can quantify the local minimum wage, okay, or it is given under the legislative, and the entry level wage which you have set within the company, you will get a figure, and obviously you can calculate a simple wage, okay, for your employees or for other workers as well. Now the proportion of senior management hired from the local community, that is also impacting the economic growth of the local community, that how much persons you are taking as in senior management from the local area, hiring from the local area. Okay, and obviously whenever you are using this thing, the definition need to be checked, okay, for the senior management, for the local, for the significant locations of operations, because these are all the requirements a company need to abide for reporting GRI. Okay, so obviously the regulations, you need to check it out, the definitions for these things. So basically under these two things, the how much the local labor employees are getting with comparison to local minimum wage, and how much hiring you are taking from this for the senior management from the local area, that will dictates about the company's market presence in the local area, how well it is taking care of the local community, how well it is doing something for the economic growth of that local community. Sometimes the local community are very backward, and even if you hire one pupil, one person from a family, there are, suppose there are 10 or 15 dependents can be on that one person, so they will get the bread and butter. So basically that's kind of local area development is also required by the company, and if they are doing so, they are doing something for the social cause. Now about the third factor, which is the indirect economic impact. So which is not actually, the company is not doing something very directly, but having an indirect economic impact on some parameters. Let's see what is it. The first part is the infrastructure investments and services supported. So basically the companies, they're not doing something for their own operational or the commercial purpose. They are doing something for the communities, for the local area. Suppose if they are they have done some investment for the school in the local area. If they have invested for the nearby road, if they have opened a sports complex, a welfare center. So all these things comes within the infrastructure investments or the services rendered by the company towards the social development. So now within this purview, company need to, or the organization need to report about that extent of development of significant infrastructure investment and the services supported they have done. Okay, they need to report current or expected impact on the communities and local economy. So the first, obviously, the quantifiable figure that how much a company is spending towards that infrastructure investment and the services. But the second part, the current or expected impact, is a qualitative measure. Okay, company need to check it out that how much it is impacting the poverty, how much it is impacting the social life. That suppose there is one child from a family who got the education, how much it can change the life of that family. So all these things are much more important and need to be right qualitatively. In the last, I will show you one annual report that how these things need to be right. The last part is that whether these investments or services are commercial. So sometimes it can be commercial. So commercial things are not need to be reported. Okay, but what can be reported? Suppose if there is a road prepared by a company for its own transportation, and if a local community is also using the same road, that also comes under commercial purpose. Okay, you cannot say that we have prepared this road for the local community. You have just prepared for it for your own commercial purpose. Okay, it is just by chance that they are also using that road. Okay, so if it is for commercial purpose, you will not include those things. If it is in kind, given in gift, you will include it. You will report the pro bono engagements, that means given as free to somebody. Okay, so that kind of things you will also report. So this is one thing. Second is the significant indirect economic impact. Okay, so there are some other parts also which wherever the companies are doing the significant impact indirectly. So the significant identifiable indirect economic impacts of the organizations, including positive and negative impacts. So sometimes it can be a positive impact, sometimes it can be a negative impact. Suppose a company has increased its production. Okay, if company is increasing production, that means what? They are hiring more labor. They are giving, they may be providing the night charges to the labor. So there will be some development, some positive impact will be related to the increased production. Okay, so that is actually indirectly impacting the economic development. So this is just one example. There can be numerous examples. If you will just check it out, this 2032, you will get a numerous example over there. So the first part is that the examples, what kind of indirect economic impacts company need to identify, although it is very difficult because direct thing a company can identify easily, but how much indirectly affecting it is something. It is very hard to measure actually. So the significance of the indirect economic impact in the context of external benchmarking with stakeholder priorities. So company need to showcase that, okay, these are the incidents, these are the indirect incidents which are impacting. Now company need to check it out up to which extent it is impacting. Okay, so that is also a very difficult thing. So what most of the companies do, they measure these things qualitatively, and now that becomes easy to report. Okay, and actually that is the problem with the qualitative measures that it is hard to compare. Suppose if you are having 1 year data and then you are having 2nd year data, then you cannot compare the qualitative impacts like that. Okay, but when it is in quantitative measures, in figures, you can compare it easily. So this is about the indirect economic impacts, infrastructure developments, and indirect economic impacts. Now the procurement practices, which is actually about the value chain practices, that how much a company is taking care of its suppliers. So the infrastructure investment and services supported here. That means, I think the heading is wrong. Sorry for that. I think the heading is wrong. There is 20 fund is related with the suppliers, as I told you. Here, a company, a organization may have different suppliers within the company, but GRI, under the GRI, you need to report that how much a company has, how much the total out of the total budget is designated towards the local suppliers. Okay, how much funds, how much materials you, how much raw material you are taking from the local suppliers. So indirectly, it will obviously develop the suppliers, the local supplier base within that local area. So that is also towards the social goal or towards the economic goal or developing the local area. Okay, so here you need to take care of the definition of the local. You need to take care of the definition of significant location of operation. Here there is one recommendation. Recommendation is that see, recommendation means what? Recommendation means that it is upon the organization whether they want to use it or not. So the recommendation in this case is that you can use accrual accounting, not the cash accounting. Okay, accrual accounting means that even if you have suppose taken something from the suppliers on the credit basis, obviously you are not today, but after some time you will pay back that money to suppliers. So you are developing that base. But so that's why they are suggesting to use accrual accounting and not the cash accounting only. So this is the one part only for the suppliers, procurement practices. Now for the anti-corruption 205. So anti-corruption, so you know that in most of the places we will see this thing, anti-corruption, the corruption part. Now, what kind of measures a company can undertake to tackle with this corruption problem? So the first disclosure 2051 is related with the operations assessed for risk related to corruption. That what kind of risk, operational risk can be there if there is corruption issues within the company. So company need to provide, so these are the reporting things. Company need to provide the total number and the percentage of operations assessed for risk related to corruption. That means that what are the tentative places? What are the tentative places, the percentage of those operations where they see any kind of incident of corruption may happen. Okay, so this is the first part. So this is the qualitative part. Okay, they need to identify, and obviously there may be some places there which is overlooked, right? And there are some places which may be included but should not be included. So it is totally depend on the expertise team which company has appointed for identifying these issues. Then the significant risk related to corruption identified through the risk assessment. So that means the incident, the operational part identified, the number of the percentage of operations are identified. Now they need to see if corruption happens, what are the types of risk which may arise within the company. So this is the assessment part basically in this part. Okay, so these assessment need to be measured by the company. That what are the places where corruption may happen and what are the type of risk may arise when corruption happens. Now the second part comprises the communication and the training part of anti-corruption policies and procedures. So basically within the company, the organization, they have the government's body, which includes the CEO, the top senior level and the middle level managers. Okay, sometimes and the board of directors. So all these manager level people, company need to communicate first of all to them that these are the anti-corruption policies of the organization, and company need to provide training to against the anti-corruption to those government's body members. So company need to, so in this case, what they will report? They will report the total number and the percentage of the governance body members they have communicated and trained for the anti-corruption. Okay, and obviously, if they have the brokerage or the breakdown of data, then they can provide it by reason also. The same way for the employees, they need to report that how many employees or what is the percentage of employees they have communicated and how they and trained for the anti-corruption. Okay, and obviously they need to broke down this data by the employee category, okay, and the reason. Suppose the senior manager, senior level, middle level, low level managers, and like that. And reason means within the state or within the whatever the area company is operating. The same way, company need to report that how many percentage of business partners they have communicated the policies, they have trained about the anti-corruption measures. Okay, so these are the basically this section talks about that how much that out of the total organizational part up to which segment they have communicated, up to which segment they have trained the part of the organizations about the anti-corruption policies and procedures of the organization. Okay. Now, when the actual corruption happens, this disclosure requirements comes into the scenario, which is about the confirmed incidents of corruption and the actions taken. So in this case, company need to report what are the total number and what kind of corruption happened within your company. What are the total number of corruptions you have and what kind of. So kind of means suppose it may be a bribe, it may be a mishandling of cash, it may be the embezzlement of cash, it may be the money laundering. There are different forms of corruption which may happen. Okay, so in that case, company need to provide this nature of confirmed case of corruption and total number of confirmed incidents in which employees were dismissed or disciplined for the corruption. So these number, suppose out of the 10 cases of corruption, 8 employees are dismissed and 2 disciplined. So these numbers and data need to be reported into the GRI. Okay, basically this, why we are doing this, why these types of things are there, we are reporting in the GRI. As I told you before that there are different stakeholders within the company, and these stakeholders need to see if any kind of mishandling happens within organization. What is the management approach? How the management is dealing with these issues. So these issues are related to the governance issues. Okay, these are the governance factors. How the management, how strict or how lenient the management is about these kinds of incidents. So these things company need to report. Total number of confirmed incidents about contracts with business partners they have terminated if they have found into the cases of corruption. Okay, and please remember, whenever you are reporting the number of these things, you will not report the numbers which are actually under investigation. Okay, which are not confirmed under investigation. So that under investigation number will not be included in the second and the third parameters. The last one is that public legal cases regarding corruption brought against the organization or its employees during the reporting. So basically, either you are dismissing something or you are canceling the contracts with somebody. Now, how many times the company has taken the public legal cases against those things? So these are also need to be reported. Now, the second last is the anti-competitive behavior. So this is also a major concerns in the market, and this concerns happens whenever the organizations is having a monopoly or it is either having a oligopoly market. Okay, so in the anti-competitive behavior, what happens that the companies are forming a group, a coalition, and with that coalition, they are either forming a anti-competitive behavior. That means they are not competing with each other. They are fixing the price. They are doing different types of what you can say behavior which are against the efficient market. Okay, in the efficient market, the price is not need to be fixed, but they are fixing the price. They are stopping the entry of the new entrants. Okay, so these kinds of antitrust behavior can be there, monopoly practices can be there. So now in this case, company need to report the number of legal actions pending or completed during the reported period regarding anti-competitive behavior and violation of antitrust. And under which the organization has been identified as a participant. So the major part of it, the reporting need to be done as company itself as a culprit. Okay, so how many times, sorry, how many times a company has to demonstrate, I think somebody's talking.
Muted, sir. Please go ahead.
Okay, thank you. So the main outcome of this thing is that the company will also report that, okay, if the organization has involved in these kinds of practices, or they have got a report from any of the stakeholders of the organization regarding the anti-competitive behavior, then what is the outcome of those legal actions? Okay, or it is under review, or what is the status of that pending request? So these things need to be reported here. So again, this 206 is also a governance related factor. Okay, this is also covering the governance related behavior of the company, that how well managed the company is. Now tax, which is the last 207 factor for this thing. So the first part of this thing is the approach to tax. So a company or organization need to report that what is their approach to the tax. Also, obviously, the approach, when we are talking about approach, all the things come to our mind is not the quantitative things, but the qualitative measures. So whether the organization has a tax strategy, if so, a link to this strategy if publicly available. So company need to provide that, okay, if there are high profit within the company, whether the company is planning to save a certain part of the profit, a certain part of the tax, and if yes, then how? What is the different steps they are taking? Okay. So the governance body or the executive level position within the organization that formally reviews and approves the tax strategy and frequency of its. So basically, it's talking about that how what you can say urgency they are dealing with these tax issues, the senior management, the governance body of the company. Okay, so if they are dealing it as an urgent issue, then obviously they are reviewing it much more frequently. And if they are dealing it like as the other general issues, then obviously they are not having much of the review meetings. Okay, so the one thing I just want to ask here, that why we are talking about the tax here, where it is impacting. See, it doesn't, how it is impacting a company, whether it pays less tax or high tax. Anybody who can tell? Because this is having a broader indirect outlook. Anybody?
So repeat the question.
Yeah, so the question is that if an organization is, whether it's paying low tax or high tax, to which parties, which are the parties it is impacting? What is the broader implications of this thing, paying high or low taxes?
That means the government will be getting lesser revenue if they're paying lesser taxes.
And you are going in the right path. You just need to, be more elaborative on this manner.
By getting the lesser tax to the government, the ultimate benefits to the public are reduced.
The local community?
Sorry?
The local community, because they benefit in the form of roads and other.
Correct. So whenever we are saying that, whenever we are saying that government, the company is paying less taxes, that means government is getting less taxes, and the less money is utilized for the public, okay, or for the local community. Or in the other sense, if the government is very, suppose, strict about giving that much of amenities to the local community or to the public, then it will burden the government expenditure, okay, that will drive the government into the debt too. Okay, so basically taxes is directly linked with the economic growth and the social impact, okay, towards the public. So the approach of the management, that how they will see, whether they will see that, okay, if there are any tax avoidance chances, they see whether they are trying to get that tax avoidance chances or not, whether they are trying to open a company into a tax haven or not, whether they're trying to, so there are different types of approach the management can identify if they want to save more taxes. So what is the company's approach towards saving more taxes? So how the approach to taxes linked to the business and sustainable development strategies of the organization. Okay, so basically, even if a company is saving tax, that's not a bad thing. But the part is that where company is planning to spend that much of money for the development of the organization, okay, or for any of these sustainable goals within the organizations. So that need to be classified here. So all these things need to be reported. Obviously, these are all the qualitative things. Okay, these need to be written right down. Then the tax governance, control, and the risk management. So under this section, actually, again, we are talking about the approaches part, the mechanism part, and the assurance part. Assurance means that first of all, the company need to provide that, okay, what kind of approach they are using within the company, and if they're using, suppose, a specified approach, and what kind of risk opportunities it bringing within the organization, and if it is bringing some kind of risk and opportunity, how the organization is able to manage it. So that is one part. The second part about the mechanism for reporting concerns about unethical or unlawful behavior or integrity in relation to tax. So basically, see, in this total section of tax, what we are talking about, the relation of the organization with government. So if a organization is considering some information, significant information, and avoiding the tax purpose, that means they are involving some kind of unlawful behavior. So they need to provide the proper mechanism through which they are reporting the tax. But not the last part. This is the most important part. When everything happened, they have shown their approach. They have mentioned the mechanism of reporting the tax. After that part comes the audit part. What are the assurance process? Okay, the assurance report as reference for the disclosure on tax need to be reported. That means the audit report then the audit is done by the CA within a company. Okay, so the company need to present the audit report that, okay, these are the things we have done, and they need to attach it, okay, as an annexure with the GRI, which will give you the description of the how much taxes company has paid. Now the third part about the stakeholder engagement and management of concerns related to tax. So again, the same part of the things. See, there are not the company. Within a company, how much a company pay the tax, it is the concern of different stakeholders within the company, which are having a direct or an indirect engagement. So the approach to the engagement with the tax authorities, suppose if a company having a good relation with the government, they are paying taxes timely, they are not deferring any kind of taxes, then obviously stakeholders will like to engage with that kind of business. Okay, the approach to public policy advocacy on tax, so they will see that, okay, what kind of public policy advocacy they are trying to imply on the taxes, and what is the company or the management view approach towards it. The process for collecting and considering the views and concerns of stakeholders, including external stakeholders. So now the company will try to get the views of the different stakeholders, suppose the suppliers, investors, consumers, there are many stakeholders. They will try to get the view on the the approach they have. Okay, so basically they need to report all these things within their GRI reports. Okay, so this is again about their governance aspect. This tax is impacting the governance. It is also impacting the economic. It is also impacting the social. Okay. The last part is country by country reporting, because nowadays an organization not only didn't work within a country, it also works in different countries, and in different countries they are having different tax rules. They are having different process of compiling the financial statements. So a company need to report all the tax jurisdictions. That means all the countries where it works, it operates. Okay, for the tax purpose, for the filing of the tax purpose. So in this case, they need to report the significant information for tax jurisdiction reported above. So all the tax jurisdictions, suppose it has mentioned that okay, it operates in US, it operates in Germany, it operates in India. But now company also need to report some significant information which includes revenue, how much revenue it generated country wise, how much profit after tax, profit before tax they have in each country, how much number of employees it have in each country. So why we are collecting this information? Because it will gives a view that what is the level of activities a company have within each country. So based on that, it can be justified whether the company is paying less taxes or more taxes. Suppose if a company having more level of activities in a country, but as per the annual report or the audited report, it is paying less taxes. So that means even if they are having a lot of activities in the country, they are not doing justification. Okay, the tax is not justified. They are not paying enough taxes for the economic, government, and social development. Okay, so that kind of implications can be taken out by checking out this level of activities happening within the country. So the time period covered by the information reported in disclosure 2074. So company also need to check it out, because not everywhere the disclosure happens at the same time. Because suppose in the US, the tax is filed like around the financial period is January to December. In India, the financial period is from 1st April to 31st March. So the time period mismatching may happen. So what that you can do, that you can take the latest period as the period for the purpose of compiling the financial statements, and you can report that way into the GRI index. Okay, so now as you know that in this section, the first part, all jurisdictions, it is the qualitative part. You just need to mention the name of the places where the company operates. In the second part, that how much the significant information the company need to report, it is all the quantitative information, and the time period, it is also the quantitative information. Okay. Now, so we have seen that okay, these taxes also impact the social, economic, and the government related factors. What are the challenges we have in the GRI implementation? So first of all, I will give you an overview about what kind of ESG activities we have in India. So in India, we don't have any regulating body. First of all, okay, we don't have any regulating body specifically for the ESG compliances. The body SEBI, Security Exchange Board of India, it manages and regulates the sustainable business activities within India. So it has given a notification now that the top 1,000 companies listed as per the market capitalization need to report the sustainable reporting within their annual reports in India. And in India, the SEBI has also given some of the principles, or you can say rules, which is divided into 9 parts. As you can see here in the GRI, you are having some parts. In India, they have also given some of the 9 principles, and those 9 principles are focused towards the environmental, social, and the governance aspects only. Okay, so basically there are not much different. The difference into the GRI and the Indian-based, what you can say, ESG implementations. The difference is in the reporting part. Okay, so as in the GRI, most things they try to quantify, but in India right now they don't have much tools to quantify the the social, economic, and all these types of factors. And the first challenge which we have in India is the implementation of all the small and medium-sized businesses. So right now, as I told you, is only a mandatory requirement for the first top 1,000 companies as per the market capitalization which are listed. How much difficult it will be to apply some, suppose, environmental related, to deal with environmental issues, to deal with social related issues for a small and a medium-sized business. I think the government need to tackle these problems also. They need to present some awareness of this GRI framework within the different places to different sizes of businesses. And the third is the voluntary reporting creates lack of uniformity. Okay, all the companies having this voluntary reporting they can do, although it is mandatory for the top 1,000 companies. The companies who are doing it voluntary basis. Now, there's a lack of uniformity. Within an industry only, some companies are reporting sustainability reports, some companies are not. Obviously, the companies are mentioning a good sustainability report, they are attracting more investors. Their share price are going high, and the others who are not presenting it, they are actually losing the competitive edge within the industry. So it is presenting the lack of uniformity, and other thing is that why in India it is not much of the quantifiable figures. It is very hard to compare two companies on basis of sustainability report. Okay, then conduct environmental impact assessment. That is also very difficult, that how much a company is impacting the environmental related issues and how much it is harming to environment. Although there are many indexes developed in India. Okay, one index is developed by the IIM Ahmedabad. Okay, so which is about the carbon emission. So, but still there are for the companies, not every company have this assessment tools. And as I told you, first point, now it is the last point here, that the absence of regulating body in India. Okay, that besides SEBI, we don't have any specific regulating body which are managing these kinds of sustainability issues. Okay, so I would just showcase you that what kind of report it looks like if we are dealing with this thing. Just give me a minute. I hope you are able to see this one. Okay, so I'm just opening the Tata Motors annual report, which is presented for period 2020-21. So if I'll just go here and check it out, that what the company is actually mentioning about the sustainable practices. Why I have chosen this company? Because obviously it should be the top 1,000 company. Okay. So right now they are just mentioning about their cars and everything. So, okay, so I'll just okay. See, key performance indicators, strong performance in a challenging environment. Still, the sustainable report is not started, but they are talking about the challenges for the environment. Okay, so you can see that how much the sustainability issues has impacted the way company prepared their reports before. Okay, if I go somewhere here in like here you can see sustainability means positive impact. So they are presenting this thing as a special thing, ESG approach, that how the company is using in their cars and towards a low carbon tomorrow. So basically company is trying to provide all the emission figures it is generating Okay, what is the employee community it have, the business level they have, the every kind of emission they are trying to provide information. Okay, so basically they are able to quantify these things. Waste management they are trying to refer, they are working on the different the what you can say level wise, that the segment by segment wise, that okay, if there is its division Jaguar Land Rover, that okay, how much it is impacting. Okay, and this is just simply board report. I'll just go the okay here business responsibility report. Okay, so basically they are not calling it a sustainability report, they are calling it business responsibility report, because they are using the Indian principles, not the GRI principles. Okay, pursuant to regulations 34(2)(f) of SEBI listed regulations, they are not using the GRI, the global reporting initiatives. They are using the national level sustainable regulations, okay, which are regulated by SEBI. So based on that thing, if you can see, they are reporting everything. Okay, employability, environment, rural development program, whatever the part, the things required for the SEBI as per the standard data. As you can see, 9 according to 9 principle they are referring here. So links for policies, you can see principle 1, principle 2, principle 3. So the principle 1, as you can see right now, is based on the conduct and governance. So the first 2 is the normal disclosure policies for the company. The third one is about the employee, that means the social factor. The principle 4 is the response towards the all stakeholders. So this is also the social part. Business should respect and promote human rights. This is also social part. Principle 6, business should respect, protect, and make efforts to restore the environment, is the environmental part. 7, business engage in influencing public and regulatory policy should do a responsible manner. So this is a governance part. Business should support inclusive growth and equitable development. It is also a governance part. And business should engage with and provide value to their customers and consumers in a responsible manner. This is a social and a governance part. Okay, so basically, as you can see, the 9 principles are provided by the SEBI, and the applicable policies are also mentioned here. The links are also provided here, so anybody who can reach can approach this link and can read out the company's policies about these 9 principles. Okay, so as you can see that right now about the principle 1, company is explaining into a qualitative manner. Okay, most of the things are qualitative here. Okay, wherever they're trying to get the quantify the things, they're giving the figures, like stakeholders complaint received, they received this much of complaints. Stakeholders complaint resolved 95. So this is the percentage. Okay, so the same thing we have learned in the GRI also about the complaints. Okay, so the same way they are dealing with every kind of principle wherever it is possible. The total number of employees hired on the temporary, contractual, casual basis, so this much. So that's what they are doing. How much of permanent women employee, this much. So basically it's showing showcasing that okay, there is a lot of inequality in the Tata Motors. So that way you can approach any company. But now you also see the problem here, the real problem. The data is not very much aligned or systematic that you can compare to companies' reports, business practices, basically in India, if you say. Okay, you cannot compare it very frequently, or if you want to compare, there is no database where you will reach out the data. You need to gather data by yourself. Okay, so that becomes a tremendous task for any investors to approach the company's data and to gather this information. So all these informations related to 9 principles are provided here. Okay, so till now they are providing the sustainable report like this. Wherever they are able to quantify, they are quantifying, and wherever the places the most of the description required, they are providing the description here. Okay, so that's all about. I have just shown you just a showcase for the sustainable reports companies are reporting. mind. Thanks. So if you have any doubt, any question, you can ask me. Any questions
Should we
regarding the
write
topic?
should we write the question or I can ask orally?
Yeah, you can ask orally. I
Ask,
don't
ma'am. No
see
problem.
that problem.
In absence of quantitative data,
Mhm.
still it is considered globally acceptable GRI reporting?
See, in the GRI, what they have done, that they have the different disclosure topic related, they have given. And suppose if they have mentioned their topics like that, where the main important thing is quantifiable, and the descriptive parts, which is the management approach they have given, is required as a qualitative things. So not obviously, I'm not saying that all the parameters can be measurable, but there's an example of PwC, the Price Waterhouse. They are actually engaging in these kinds of methodologies through which they can measure the unmeasurable things. They're also working on some methodologies.
Okay, so right
Hello?
now there is no such methodology in place where just figures can be
No.
given.
So I'm not saying no methodology in place. Whatever you can quantify and prepare your GRI index. That you can do still. But there are some more factors which can be included, which is right now in the qualitative figures. Okay. For that, they are trying to prepare some more methodologies, and whenever they can quantify it, they can include that parameter also into the GRI index. That's what I'm saying.
Oh, thank you.
Yeah.
Actually, ma'am, the major issue is that it is not mandatory. If you talk about in Indian perspective or any other country perspective, the GRI or sustainability reporting till now is not mandatory. If you go through the SASB, there you'll find out around somewhere around 77 sectors they have picked up, and it is more in quantitative form, but that is primarily for the US companies. So their quantification, because they used to analyze the data in a more quantified manner. But GRI, when we are considering GRI, it is a blend of qualitative and quantitative. And as we have discussed, that it is not mandatory. So people are posting their requirement, their job role as per their convenience.
Yeah, I just want to add one line that I think that I have read somewhere that in year 2023, financial year 2023, it's gonna be a compulsory thing for the listed companies.
Okay.
So there was
Thank
a
you, sir.
question.
Thank you for
There is
such
one
type
question.
of informative session.
Any good book on financial sustainability or something? There was a question from one of the participants. Yeah, is there any good book on financial sustainability?
Good book. I think most of the things I have read on the research based, or I have checked out the GRI website. So if you want to if you want to read more about the standards, then you should approach the GRI, which can be approached online. And for the Indian standards, the same way, you can check out the guidelines presented by the SEBI. Okay, I think Mavin sir will be able to tell some good textbook in this regard, if is there any.
Actually, in financial sustainability, we do not have much of the books available. They are, even at this point of time, sir, most of the books are either on corporate sustainability or some other area, because when we are talking about this financial or economic sustainability, they are primarily more correlated with the financial management part. Even if you go through the standards also, the disclosures, they have been talking more precisely about that. So if somebody want to do or deal more in detail about the financial sustainability, better you download the sustainability report of the companies. From there, the learning will be much more higher. Any other question from the participants side?
Yeah, this is Ranjan Singh here.
Yeah, please, sir. Go ahead.
Sir, whether there is any policy formulation in the process, or is there any policies that whatever the revenue coming from a particular sector, towards that sector, some sustainability works to be carried out by government. To be specific, suppose there is a lot of mining and metal industries. Lots of revenues are given by companies or organizations to government. But at the rate of return, whether government is equally doing some work from towards this areas, community, or these sectors, because whatever the taxes are collected from as a whole towards all sector, it is uniform distributed and compensated through all areas. Whether there is any specific policies that this small percentage of to be revert back to the particular sector.
I don't think so that the government is taking care about that part. That government see all the sectors as a whole. They don't see the sector wise, and they don't issue the subsidy or the what you can say some kinds of incentives sector wise. So I don't think so that any kind of policies which will be in place right now in future sector wise.
There was a debate also.
There will be policies. There will be policies sector wise. There will be circulation sector wise. But I don't think that any kind of the incentives which will be there in place.
Okay.
Is there any other question from the participant side? Okay. So thank you, sir. Thanks for your valuable time. It has been a really
And thank you for inviting me for the well-designed curriculum development program by the NIT Rourkela.
To be very honest, it has been a very detailed and descriptive session on economic sustainability perspective, to be very honest. And hopefully most of all of our participants have learned a lot from our speaker. And sincerely thanks for your valuable time once again, sir.
Thank you, Dr. Mohin.
Thank you, sir. Really a wonderful session.